options trading seems to have a bad name, but mostly from the uneducated or the people who attempt various methodologies trying to figure out all the time why things do what they do without really understanding the very basics. You ever had a job that you just got thrown into without understanding the basics about what your job function was supposed to be? You probably realize that that's the way many people in life approach investing, from a haphazard point of view, gathering all kinds of mostly useless information, and then attempting to use that useless information for some productive purpose without actually understanding the basics about the investment that they're about to embark upon. And options, by their nature, are leveraged, what they call derivatives, meaning they are derived from the underlying security in which they trade, such as the S&P 500 index or IBM or Cisco Systems or whatever the ticker symbol happens to be. And the options are derived from that. So they are related to the underlying ticker symbol. So you can determine what price you want to buy the options for or sell them or whatever it is that you want to do. So anyway, that's just a little basic understanding about those things. And I'm going to just give you some of the features and benefits like any good salesperson would attempt to tell you about their product or service. And these are things probably that most people would be interested in. It's a very low cost to learn how to trade the way that I trade and other people that do these types of trades the way I've been teaching for so many years. You can start with a $50 bill or $100 or whatever if you choose to do that, or you can invest large amounts of money. And that is strictly a personal choice, and it also has to do with your level of confidence in knowing what it is that you're buying and why you're buying it. So ultimately, you have to know those things before you make any kind of a trading decision to invest your hard-earned money. Most brokerage companies, the big ones, TD Ameritrade and Options House and these type of people, and Schwab, and I think most of them have these free simulation type trading games, which are totally free and it doesn't cost you a dime to practice the understanding of different methodologies of trading until you find something that fits your particular personality and your style of understanding and all that kind of stuff. So yeah, the type of thing that I do is not like what most people have done. It's not like what you hear on television or the radio talking about the fundamentals, which typically is what all these investment gurus talk about. The earnings are this, the earnings are that, or you got to wait until the CEO comes out and see what he has to say, or the price earnings ratio, or what are all the analysts saying, or all this kind of. You don't have to know any of that information. There's no sense in studying anything that doesn't produce results. So you can just avoid studying information. All we have to do is learn how to look at the chart patterns to understand what it is that actually makes the price move adequately enough to justify buying these options that we're talking about here. And the list of things that have the heavy volume activity for options trades is a very tiny list, and these same symbols create the same types of patterns over and over and over and over again. And it's been doing this ever since I began. This is something that will outlive all of us. It'll go on in infamy long past the time that all of us die. The same formulas and methods, the same ingredients will always be true. They have always been true as long as I've been doing this, and they have been true in every single market condition, no exceptions. Whether the markets move sharply to the upside or they plunge to the downside, it doesn't make any difference what the markets are doing, because we are looking for a particular type of pattern within that mix of up, down, sideways. We're looking to reach in and grab a picture that means something, something powerful, so that we can leverage what we understand. And this has been something that has confused numbers of people over the years because they're so used to being told that they need to know something else, or that if someone tells them that something like that is possible, that it's too good to be true, so run, do not walk the other way. And I hate to have to break the bad news to people, but if you run and away from these types of strategies, that you are running from potentially the most powerful investment tool that you have ever seen, and the one that would be capable of producing profits that would exceed anything that you have ever imagined in your lifetime, and do so with regularity, with just a high level of confidence and consistency, and so that you can feel very, very, very comfortable in spite of the fact that these things can produce in the multi-thousands of percent return. Now, I know that scares a lot of people. Just those numbers frighten a lot of people to death. But keep in mind that when you're trading these options, that you're limited on your loss capability to begin with. If you invest $100, that's all you can lose is $100. You can't lose 500. So the fear that people let themselves be overwhelmed by is unfounded. It has no real purpose. There's no complex strategies required to do the kind of things that I do. You don't have to know, if you're familiar with options, about these Greeks, which are supposedly designed to tell you how quickly the underlying stocks or index or whatever is going to move, and whether the options prices will keep up or make a profit. Those things for the most part are totally useless as an options trader trading for profit. At least the way I do, that they have absolutely no use and no purpose. And so there'd be no sense in learning any of those things because they would not benefit us. There's no sense of wasting time on things that don't benefit us. So let's try to avoid any wasted time. Let's focus on the things that matter. You don't need to know about candlestick charts. Some people are hung up on candlestick charts. Elliott wave, all these are technical, so-called technical analysis tools that people have tried to use over the years, and they're theories about why they think the prices should do something, but rarely do they ever do what these things forecast, and they don't do it at the time they forecast. So that is a requirement to be a successful trader, whether you're trading stocks or options. You have to know what it is that makes the price move and when. So it doesn't do any good to buy a stock at $100 today and watch it drop to 50 and then turn up because the Elliott wave said it wasn't supposed to do whatever it did when it did it, or the Gann theory or the candlesticks or all these other things. You've got to have something a little more concrete than that if you're going to be trading options. You've got to be able to forecast things with an incredible degree of accuracy. And that is what we do here. And I've been doing this for a long, long time, and it works extremely well. So the details of participation, if you want to learn more about what it is that I do and what we do as a group, the name of our group is theoptionshunter.com. And it's a very dedicated group of people and very smart people. We have women and men from all around the world that are interested in the same topics, the same information, and they are people who think out of the box. They're not people who are normal type thinkers. They understand what the truth could be and that it may not be as everyone is telling them. Maybe it is something different. And so we have all different types of ways for those people to communicate with each other, as well as I communicate with people on a weekly basis. And some people think this is just crazy and this is gambling, and you hear I've heard all these things and arguments over the years, and nevertheless, I keep making money, and anybody who ever pays attention to what I've been teaching for all these years makes money consistently and does it very reliably, in spite of what all these people think is gambling and speculation and it's crazy and all these things, and nobody's ever heard of 1,000% return. That's outrageous. If it makes 1,000%, then you know, it's got to be incredibly risky, and that is just not the case. The risk and reward things are not like people think. It's actually quite the opposite. The greatest returns that I've ever seen on these options are the ones that have the most well-defined technical patterns, not the ones that are speculative, the ones that are absolute. Gambling, like I said here, gambling is when you don't have any control over the outcome, but we do. We know what we're looking for in a pattern. It's not information. It's a artistic look. You just have to learn to be a good observer of things. And fortunately for us, the things that we're learning to observe are the same in every market and the same on every time frame. So if you use a little bit of logic with that, you'll discover that the lower time frames can dictate very clearly what is going to happen to the underlying stock price or index price in the very near term, whereas the long-term charts are going to force the prices to continue moving in a certain direction for an extended period of time. And both create opportunities for short and long-term trading opportunities, so it depends on your time constraints as to which is most suitable for you, or maybe you would like to do a little of both, long-term trading and short-term trading, and that's perfectly fine and acceptable to do both. And so these 1,000% returns that so many people think are speculative are not something that happened like so many people seem to believe on a very rare occasion. That is not the case. In all the years that I've done this, I rarely see a week pass that I do not see 1,000 or multi-1,000% returns on just the major index options like the S&P 500 index or the Spiders index ETF. And yesterday till today was a prime example of that. The out-of-the-money call options on the SPY moved in excess of 2,000% since yesterday, just to give you an example. And let's see. These are just basic things here that I have that everyone should have an understanding of what options are. Instead of asking about what a ticker symbol is, they should already understand that kind of stuff. Do some basic work on yourself, on your own time and things like that, on your own understanding of things before you get involved in a class like ours. And just don't try to learn too much in other places, like all these books that tell you about all these option strategies and things like that. I think I would avoid that if you want to do what we're doing. And see, just catch up here. And this right here is the basic small list of tickers. Like I say, it's under a dozen symbols that are the primary targets of things that we're looking for. And occasionally there are a few other ones that we may track or follow, but for the most part, this is the list that we're always interested in. And long-term traders, like I say, it depends on your obligations, your time constraints, and things like that, your family obligations, your work obligations, things like that. Short-term traders have more time to sit and look at things all during the course of an individual trading day. All trading requires goals, patience, and you have to know the best types of patterns, and you have to be able to act in a decisive manner, and then monitor the lower time frames for your entry exit points, things like that. If you want to know how to use a financial calculator, you can certainly use those. Either get a free one on your iPhone or your Android apps that are free. They're financial calculators, or find them online, or you can go down and buy one for $20 or $30 at Walmart or Target. Business analyst calculators that do financial calculations, and you can quickly figure out the percentage returns on some of these things. And learn how to compound or what compounding your money could actually do. So once you learn how to employ these strategies correctly and feel comfortable and confident about what you're doing when you make a decision, then there's no reason why you couldn't take all the profits from one and move it right to the next trade. There's nothing inherently risky about any of that except your lack of understanding. That's the only risk that would be associated with that, because the patterns work correctly all the time in every market. So you have to have some discipline to take action. So you can't just wait and wait and wait. You have to, at some point, act, take a trade, and follow it through to its conclusion. Not all knowledge is created equally. As we probably all know, listening to the financial gurus on the television and newspapers, it's odd because in the last, since the beginning of the 2016, I have heard every kind of excuse and story from these strategists and these analysts that I can imagine. And most of them are disclaimers to explain why they don't know. And in their mind, if they don't know, that means no one knows how to do anything. And I've heard people continue to tell me even today that the market's path of least resistance is still lower and you should only trade to the downside. Well, if that were the case, then you would have missed one of the greatest returns that the market has had on the upside since the 11th of February, and that's only been 2 weeks ago. And there's been an extraordinary move to the upside into the multi-thousands of % return. So you would have let all of that stay right on the table with your insistence that the market is going to keep going lower. Well, you've got to learn how to pay attention to the facts in front of you and live in the moment, live in the day to be a profitable and successful trader of options. You can't look at something in an arbitrary way. It has to be precise. So I spent a lot of time developing that precision and sharpening this tool so it's very finely tuned to this type of trading. And all you have to do is just use it. So learning the correct entry and exit points and things like that is something that's very easy to do if you get involved with the class that we're doing. Like I say, you practice trade, learning about strike prices, out of the money options, in the money options. You can learn how they trade relative to the underlying security. Learn about the physics of the movements of the prices. It's just like Isaac Newton would have told you, something was at rest, it's going to stay at rest until something jars it into motion. Well, what is that something? It's not information like so many people seem to believe. It is a technical force that's at work, and that technical force works in exactly the same fashion. It doesn't matter what the ticker symbol is, and it doesn't matter what group or sector it may be from. I've seen gold stocks move with the same exact patterns that technology stocks move, or cyclical stocks, or consumer stocks, or bank stocks. They all have the exact same type of patterns. Even all the bank stocks or all the gold stocks may move together, even though they're competitors with each other. So you don't have to know anything about the companies. You just have to recognize the patterns' influence on the price. And then you will be able to successfully trade out of the money options like we do. And the patterns just have to learn. You have to learn how to interpret the patterns like a language. You have to become fluent in the language of the patterns so that you can feel comfortable doing what you do. I'm going to just show you a couple things here. It's information that I shared with my group of people online as far back as 3 months ago when I explained to them about the strong divergences that exist on the GDX and gold mining stocks, like Newmont Mining and Barrick Gold and these things. And they were very well defined patterns then. And then each of the lower time frames confirmed the direction and the divergence that existed on the monthly charts. And this is what I'm talking about. The price bottoms were going lower, lower, lower on the gold miners index, but yet the technical bottoms on this MACD that I use is going higher. So the amount of pressure against the price bottoms was increasing at an alarming rate. And it has given rise to many good call trades on out of the money call options. Many, underline many, over 1,000% return on just this one index alone. And that's been over the past several months, enough to have retired a few times over if you'd chosen to pay attention to those details. This is the weekly chart, also diverging, but the prices bottoming at the same levels, and the technicals getting higher on the bottoms. And this is the daily chart also. The technical bottoms were higher. The prices were the same bottoms or even lower over here. And the technical force against the price was great. This is a 3 times multiplied index of the gold miners for people who are skeptical of options or just getting accustomed to options, but can also give you the ability to leverage your money at 3 times the movement of the GDX index itself. So if the GDX moves up 10%, this would move 30%. Well, the price of this index just over the course of about the last month or so has moved up 250%. So for those of you who understand your math from elementary school and junior high school or whatever, you know that's 3.5 times your money without using options at all. So an investment of $100,000 would have been $350,000 just in the last month, with the same influences that affected the gold miners index itself, the GDX, but this is a leveraged index. This is just an example of what happens on the call options. A little more than 3 times, I would say, on these, if you were interested in buying these options and understanding the technical influences. But these call options, these were the February 18 calls that expired, I believe, last week, last third Friday of February. And just back January 22nd, these options were only 7 cents. I traditionally trade options that are only under 10 cents a share when the technical patterns dictate that. And then as of February 18th, just last week, those options were as high as $3.85. So that is a 5,400% return in under a month's time, or 55 times your money, which is $1,000 to $55,000. Or even just in the first few hours, you doubled, tripled, quadrupled, made 10 times your money just within the first few hours or a couple of days. So you could have sold it at any time you had chosen to, but the technical patterns that were feeding the move did not say to sell. They said stay the course. And they're very strong, and it remain strong even to this day, with just minor interruptions to that strong upward trend. So you can see what happens as an options trader that can just shatter all of your preconceived notions about the financial world. And these things are, this is not uncommon what I'm showing you here. This is quite common. So this is just one example. I don't want to inundate everybody with 50 or 100 different examples, but there certainly are many examples of this type of thing right here, or some much greater than this, and to the tens of thousands of percent. So this is just fairly typical here. Just in case you think this is extraordinary. It seems that way, but it's really not for what we do. Attitudes, yeah, nothing succeeds like success, but yeah, nothing matters as much as clear vision. That's true. And I guess it's true understanding these chart patterns. And it's Vince Lombardi had said the same thing a long time ago. He said it's difficult to be aggressive if you're confused. So let's not be confused. Let's have this clear vision about what we're looking for, and let's stay with it. Belief and conviction, some quotes here. Make sure that you develop an understanding of these kind of things and your attitudes and your understanding of these chart patterns, and you will be amazed at the results. So anyway, hope to see some of you guys in class, ladies too, and it's nice talking to you.